Welcome to Zanaco Unplugged, the podcast that takes you inside Zambia's biggest bank and brings you conversations with business leaders and creative pioneers. In this episode, we'll be discussing the future of banking. Our host, Joan Mtaja, Senior Specialist in Compliance, Training and Monitoring at Zanaco, will lead the discussion with Zanaco's management team about the bank's upcoming initiatives.
Good morning, ladies and gentlemen, and good morning, our shareholders. Well, we are talking about the future of banking, and as I look across the room, I'm filled with pride because I can see that our shareholders care, and they're here eager to learn about what Zanaco is doing, and also to learn about what we're planning for the future. So I'm glad to be having this conversation with some of the members of our management team who manage critical elements of our management and operations within the bank. Welcome, everyone. The questions will not be hard, I promise. So just to start the conversation, I'll start with you, Charlie. Your presentation was very insightful, and it showed us some of the initiatives that Zanaco is putting in place. And it really showed us how banking has evolved in the last 55 years. So we've seen a lot of things that even Zanaco has pioneered over the years. But one of the things that remains quite topical is the issue of our branches. It's not an issue, but just our branches and branch banking. Branch banking is still a very large element of the provision of banking services. The CEO in her presentation did actually mention that Zanaco currently has 15% of the branches, of 404 branches in the country. So then the question would be, what do we see as the future of branch banking? Where do we see branches falling in the future? Do we see them becoming obsolete? What's your take on that, Charlie?
Thanks, John, for that question. There will be a significant change in the way branches serve our customers, but they're not going to be obsolete. And I can give some details around that. So we've seen a shift in as far as customers, or in the way customers interact with banks. So a number of customers are able to interact with banks using online platforms. And we've also seen a trend where banks generally are investing a little bit more in that space. From an automation perspective, we're also seeing services being streamlined. I think we just heard about the Coco chatbot. That reduces the need for in-person interactions. So again, that's the shift that we're seeing. And then the use of the branches themselves, there's equally a shift. Most of them are being used as financial advisory centers. When you want to have a sort of intimate engagement with a customer or want to resolve a complex service issue that require human interaction, so that also come into play. Branches also serve as community hubs. I'm sure some of our shareholders here could have been retirees that we want to walk into a branch, meet workmates, and have a conversation. So the branches will be used as hubs that foster relationships between our customers and also our customers and the bank. So what we'll see then is a combination of the two models where there's use of the branch and also online usage. So that will be a hybrid model where online and in-branch services are going to come on the cards to meet the diverse customer needs. And then branches will also evolve into experience centers. So if you want to just have an experience of what the new technologies, products, and services, you can go into a branch, find a screen, play with it, read about new products and services that have come through. We will be seeing a lot of that. Now, there's been conversations around cost efficiency and the concerns around brick and mortar. So there could be banks that may want to reduce the number of branches. Other banks will focus on right sizing, just having the reduced floor size. And then other banks will continue opening branches in strategic locations that have got business opportunities. The key issue is to ensure that customer preferences are factored into the decision when it comes to branch networks. It is important to have an inclusive and sustainable digital transformation. For me, I call it a fair and just and sustainable transformation that doesn't leave out those customers that still want to go to the branch. So you prepare for the future, but we cater for the needs of the customers at present.
Thank you. Thank you very much for that. Thank you. A fair and just and sustainable transformation. I like that, and I like the idea of our branches becoming hubs and advisory centers, and it's the way in which, as banks, will continue to serve our communities. Thanks a lot, Charlie. As we're speaking about the hybrid approach, what I imagine is a highly operationalized and efficient unit or branch, so which means that would need to integrate or embed some operational efficiencies into our processes. So my question to you, Vincent, would be what measures are being implemented to enhance operational efficiency and to streamline processes for the future?
Thank you very much, Joan. And I think the starting point to the response on what measures banks are doing and will continue to do looking into the future around driving greater efficiency is embedded in the implications of technology. So if you look at banking historically up to where we are now, there has been a progressive improvement in the speed with which transactions get executed. So a long time ago, you'd expect a mere payment to take maybe 2 days to be processed. We have gotten increasingly to instant settlement. When we look into the future, instant settlement begins to become the imperative across all the payment value chains. We do have things like RTGS and DDAC payments, for instance, that are not yet 24/7. You can't settle those over the weekend. So looking into the future, those are things as a bank we are beginning to see even the central bank begin to commence conversations around. Let's begin to migrate some of those processes into 24/7 clearing. What that means from an efficiency point of view for banks is that we are able to handle increasingly higher volumes of transactions and doing those very, very quickly, which drives in the speed and the efficiency thereof. Whereas banks internally are doing that to leverage the technology, we are also beginning to see the issue around various players across the value chain of banking beginning to create capabilities that are unique, that make them significant players in the process. Fintechs, for instance, financial technology companies, the likes of MNOs in our country, have mastered certain parts of the payments value chains. And therefore, what becomes critical for banks currently and looking into the future is how we collaborate, how we partner, how we outsource some of our services to those players that can deliver quicker, faster, better, cheaper for everybody in the process. That way, the benefits are mutual to players that therefore engage in that partnership. Also, what we have seen as a trend that has already happened, but will also continue to happen in the future, is that much as we have automated, we've digitized, we have gone electronic, there is still an element of banking that requires human effort. So what we are beginning to see is that a lot of those processes are getting from decentralized models into centralized. Those of us that may have been in banking or have enjoyed banking services for a long time will remember that a lot of bank branches are branch operation centers. What we see currently is that those back office operations have been centralized into centralized, highly specialized units at the center. That drives efficiency significantly because then you can improve the quality, control the outputs much better from one central location compared to decentralized. This trend will continue going into the future, and a lot more services will be going in that direction. Also, what is critical is that whereas all these infrastructure systems, processes are being digitized, streamlined, and automated in that manner, we cannot ignore the impact on the employee, the workforce. Going into the long term, and already historically, we have seen that at an employee at the workforce level, the level of productivity per employee is significantly improving. Why? It is because employees are now beginning to leverage these technologies to improve their decision making with data analytics, artificial intelligence, and things like that. An employee today can make far quicker and far better decisions than an employee of 20 years ago. And when we look into the future, therefore, an employee of 10, 15, 20 years from now will be able to make significantly greater decisions and much quicker. So when we put all this together, and to just summarize and conclude, the impact of all these efficiency initiatives lead to better service delivery for the customer into the long term as we look into the future, but also significantly higher apportionment of value to the shareholders and to the employees as well.
Thank you. Thank you very much, Vincent. So what remains clear then is that these operational efficiencies and even the hybrid branch operations that we spoke about will leverage a lot on our technology and our innovations. And as I was reading up on this, I came across the concept of open banking. I'm glad CEO referred to it in her speech as well. But I just want to understand, Matthews, what is open banking and what does it mean for me as a consumer, as a person working in the banking sector, as a shareholder listening today? What is open banking and what are the benefits to us?
Thank you very much, Joan. Open banking is the banking of the future, which is platform-led. It uses integrated data sharing kind of capability, where players, be it financial institutions or fintechs, integrate their data sets to be able to eliminate barriers that exist in the traditional banking model at the moment. These barriers, you appreciate that they create a lot of delays, poor turnaround time in terms of some of the requests customers might ask from an institution, but also they bring in friction in terms of to enjoy the experience of the product that the customer would like to actually have from an institution. The key enablers of open banking are artificial intelligence and then data, but also willingness among its players to be able to share their data sets, to interoperate as they run their businesses. And then number 3 is integration. So this particular model unlocks a lot of value to institutions that play, that integrate, as well as the customers themselves. For example, if you talk about scalability of your product offering, it comes at a high cost in the traditional banking model for you to be able to reach 1 million or millions of customers. But while open banking coming into perspective, the cost is reduced because you do not have to build everything that you want to offer to a wider audience. You don't have to bank every person that you want to offer services to in open banking. You just integrate with key players, and through data sharing, algorithms are built off your platforms, and customers are given a wider view from the platform that they sit. It could be mobile money wallet platform, mobile banking for a bank. They will see a wider range of services from there, and they can make choices from there. They can also see pricing real time. So from that perspective as well, you find that a customer, in terms of choice, they're actually spoiled for choice. They're given power to go for the price they want, not forced because they are locked in a particular platform where they are acquired. So they have that leverage to be able to choose what price they want to get, whether it is a mortgage or whatever product they want to get from a particular institution. And this happens in a real-time basis. Then when we take it further into cost cutting, for example, a bank doesn't have to build everything that they have. Once you integrate, there are fintechs that are specialized in building products and services, but they don't have a customer base to sell to. So they can actually integrate with you and expose those value propositions in real time, and your customers can consume. Then you share the value that you derive from that particular collaboration. And then when it comes to issues of integrating your data set, for example, into government services like Ministry of Home Affairs, for example, this becomes very crucial in unlocking the experience customers go through in the current models, where to open an account, they go through a rigorous process. Sometimes if they want to change an institution, one from the other, they have to go through the same submission of the same documents they gave to the previous institution where they opened an account before. So open banking eliminates that. When you integrate with the government data, you'll be able to validate singularly the data of a customer, and whoever wants to offer service to that customer uses the same single point where you acquired that KYC from that customer. It would also propel self-onboarding. Right now, I think account opening is dependent on a person talking to person and someone aiding a particular person. But with open banking, customers will be empowered to open accounts on their own. Why? Because with the integration of data seamlessly, validation of KYC will be done on time, and then compliance will also be protected and taken care of from that perspective. And all this brings in efficiencies in terms of delivery of services, but also it changes the turnaround time that right now could be a bottleneck in the process. Lastly, Joanne, when you go to the credit space, sometimes every institution has got different turnaround time for loans that you would apply for you to get that loan disbursed to you. But when it comes to open banking, there will be real-time disbursement and access of credit where there is no person talking to person, but the platform itself builds profiles of different customers based on what they do and based on algorithms that have been set on the systems and the data that is actually being shared between players. And customers can get a loan on demand on their platform and accept it, and it will be disbursed quickly. And I'll give you an example to illustrate further on what I'm saying. You would have a financial institution integrating itself with an MNO or a telecoms service provider, which has mobile money services and customers. So the bank can lend to MNO customers off its balance sheet, not from the bank mobile banking system, but off the mobile money platform of that MNO. So the customer from an MNO will see the product right on their platform where they are sitting. This unlocks the customer from the locking system where if you're on a particular platform, you can only see what is there. But open banking breaks that barrier and it widens what you can see and gives you more power and control on what you can do. And then you will see customers making more informed financial decisions and institutions becoming more agile, more innovative, and being able to scale at a minimal cost than the cost they are bearing at the moment. Thank you.
Wow. Thank you. Very, very insightful. Thank you very much, Matthews. And one of the things that I'm taking away from that is that all of this has a very huge dependency on our technology and the new technologies that we see. We can't talk about the future in any context without words like artificial intelligence coming up, words like blockchain and cryptocurrency and quantum computing. So as these things are being mentioned to us, sometimes we're not so sure how exactly it affects our operations or our experiences as we obtain financial services. So I'll ask our internal tech guy, our acting chief information officer, to just break down these concepts of artificial intelligence, of quantum computing and blockchain, and just explain to us how they benefit us and how they benefit the banking sector.
Without a doubt, Joanne, AI, blockchain, quantum computing, these would definitely shape the future of banking, drive efficiencies, better security posture, and obviously bring in some innovation. Artificial intelligence, which we all know as AI or refer to as AI, will bring about a personalized service for customers. It will be able to give predictive analysis to customers. Decision making will be faster and better. I think from a wider perspective, from the bank perspective, we'll be able to go through vast amounts of data in record amount of time due to AI. Obviously, currently, we've got chatbots and virtual assistants. Over the next decade, these will become smarter. This will be a way of us interacting with one another through chatbots and virtual assistants. And obviously, with AI being continuous in terms of learning, from the customer perspective, that learning ability then helps them in terms of a better service and better feedback. On top of that, what we'll also see in the industry is sentiments analysis. So with sentiments analysis, I think for any bank, it's very key to understand the customer experience and feedback from the customers. I think sentiments analysis changes this to a better view in terms of we'll then be able to get real-time feedback from customers based on their sentiments. You walk into a branch, AI will be able to detect whether you're happy or not with the service that you've been provided with. Talking blockchain, I would like to just break blockchain down into something a little bit more understandable. Taking it into similar to an analogy of a traditional accounting ledger. Accounting ledger with various transactions. What we have, or what this blockchain is an accounting ledger, and every participant in the network has a copy of the ledger. This ledger is what's referred to as the block. One block connects to another block, connects to the next block, connects to the next block. Each participant has a copy of the ledger. This then forms the chain, hence the term blockchain. So what we'll see with blockchain is more transparent transactions, faster transactions, and more secure transactions. Over the time, what we'll also see is intermediaries, payment processors, clearing houses. Those intermediaries then go to allow for that faster transaction to the customer. From a wider view, what you end up having is central banks having their own digital cryptocurrency. You can imagine just the kwacha being similar to Bitcoin, right? Yes. Further on in terms of quantum computing, what we'll see with quantum, or just breaking down what quantum computing is, this is, just think of very fast, very quick processing. Faster than what we have today. I think our conventional computers, for those techie people in the room, processing is either a 1 or a 0. 1 or a 0. Quantum computing, it will be able to process the 1 and the 0 at the same time. So what we'll see is computer processing will be 10x or 1000x the amount of what we have today. We'll then be able to go through fast amounts of data, quicker processing, and be able to turn around in terms of things like loan processes will be much faster and much quicker, because all that data will then be processed at quantum speeds. Right. In conclusion, these technologies won't work off as individuals. I think intertwined, the one will work off the other. You'll find AI using blockchain using quantum computing, and therefore just building this whole happy ecosystem that will obviously bring some convenience to the customers, ease of use, as well as better turnaround time. For the banks as well, to increase our security posture, as well as help us then effectively and efficiently serve you, the customers, at large. Thank you.
Thank you very much, Longa. And as you were talking, I could definitely see that the evolution of banking has really widened our threat landscape as well. Because as we're looking at the supercomputers, things are happening really fast in real time. Obviously, even the risks then are widening. We're looking at the climate change and some of the economic challenges and changes that we're facing. So my question on that to you, Mutisunge, would be, what is the banking sector doing to stay ahead of the curve in a fast morphing business landscape?
Thank you, Joanne. Maybe before I respond to the question, I did my own stats, and the word risk was mentioned 33 times from the time everyone gave a speech, and I was just smiling there. So, yeah. So the threat landscape has evolved and is evolving very fast. You have rightly mentioned, a few years back, we had COVID-19. We thought COVID-19 was a health issue, but this is a health issue that affected businesses. It's a health issue that shaped balance sheets. From COVID-19, we now have climate change. We thought climate change was weather and climate issues, but we're now seeing climate change manifesting in electricity outages, agribusiness, and a plethora of other effects. my colleagues are just talking about technology and how it will just transform the future. So we've heard about artificial intelligence, but all these are just taking fraud risk to a different level. And the industry has to be 10 steps ahead of fraudsters. So you can imagine, as the landscape is evolving, partnerships are going to be very critical, investments in tools to ensure that safety is priority. We would like for customers to feel very safe. While at the same time, resilience as well. So all those integrations with MNOs, with the fast computing as well, you just want services to be available and nothing to go wrong. So risk is usually viewed with a negative lens, but the industry must choose to view risk with a value preservation lens, a lens of opportunity. So amidst all these risks, there are always opportunities and silver linings. So interestingly, the understanding that risks are interrelated, they are interdependent, they are integrated, and they are symbiotic. It's become very complex. One thing leads to the other. But ultimately, as we get into the future, safety, resilience is going to be very key, and all this is for the preservation of sustainable shareholder value. Thank you.
Thank you very much. That is very reassuring, and it brings us into our next point, because we are doing all of this to preserve our shareholder value and to ensure that we are providing better quality services for our customers and ensuring that we carry everyone and leave no one behind. And we saw how we have received awards and accolades on financial inclusion, which just shows and speaks volumes on Zanaco's commitment to ensuring that there is financial inclusion. And my question to you, Chanda, then would be, what strategies should the banking sector implement with regard to financial inclusion, especially for the underserved in our society for the future?
Thank you, Joan. And I think banks need to take a multifaceted approach. I think there are a number of strategies that banks will need to put in place, and starting with having technology-driven innovative solutions. This is very critical for serving the underserved communities in the future. I think banks also need to focus on strategic partnerships, which is also very critical, because for banks to be able to reach the unbanked and to serve the marginalized communities, banks will need to partner. And lastly, I think banks need to also invest in community initiatives. And an example that I feel of a community initiative is the agency banking model, because then you're reaching the communities. So most of us in the room will know that 42% of the Zambian population is actually financially excluded. This, as banks, we see is a massive opportunity, and a massive opportunity for us to provide the right solutions for our customers. I did speak earlier of community initiatives and of the Express agency banking network. So with the agency banking network, and I'm sure most of us in the room have used this before. Maybe you've got one that's very near your home, or you go past one almost every day, because the Express agency networks are all over. I'll give an example of Zanaco. With Zanaco, the bank has got over 30,000 Express agents, as mentioned by our chair in his remarks. We also had one of the winners mentioning 31,000. So we're just getting to 32, I must say. And I know that one of our shareholders also mentioned 41. We're getting there. Thank you very much for that prophecy. And for us, what these agents do is customers are able to get financial services from the agents. So you're able to withdraw, you're able to deposit, you're able to pay bills. There's government service bus collections, as mentioned by our CEO earlier. And so these agents are everywhere, cut across all 10 provinces. Where most banks are not able to provide brick and mortar, the agents are there. What I like the most about the agency banking network is what these agents are doing for the communities. And I'm going to talk about job creation. So through the Zanaco Agency Banking Network, we have provided over 45,000 jobs across the country. A big hand to Zanaco. And I say this because these jobs are going to the youth. These jobs are going to the women in our communities. I'm sure when most of us use these agents, we see the youth that we interact with and the women that we interact with. So that's making a difference in the communities. And that's why earlier I called it a community initiative. So that is very, very, very critical. I think also to note that the agents are now getting in-store. So we've got what we call the in-store model, and I think Matthews will be very happy with me touching on this because it sits under his space. So with the in-store model, what Zanaco has done and what other banks are doing and will continue to do as we focus on the future is we now have agents in stores. So we as Zanaco, we've partnered with ShopRite, Choppies, Cheers, China Mall, Pick and Pay, and with some service stations as well. That's Ruby service station, that's Puma service station. So what we're now doing is making sure that we are everywhere. Even where we can't be in terms of brick and mortar, we're still able to serve in the underserved communities, in far-flung areas, through these strategic partnerships and through these in-store models, which I believe is a game changer. And I think other banks will latch on this. Some are already doing it as well. And I must say, Zanaco is in the lead with close to 32,000 express agents across the country. Another game changer that I'm seeing is a trend that will expand is the merchant code. So currently, customers are now able to make payments using merchant codes. So you can go to a merchant, you're making a payment, whether you're buying tomatoes, you're paying for a bus ride, whatever it is, you can use a QR code to scan and pay. Now that is a difference. And as Zanaco, we've got 120,000 of those across the country. That is financial inclusion, and that is making a difference. And we see this trend expanding into other banks as well. In terms of strategic partnerships, I did talk about this earlier. What we're seeing now is banks are beginning to partner, to have great collaboration with different partners. So that's with the mobile network operators, that's with the big tech companies, that's also with the startups, because the startups are coming with great innovations that we can't ignore. But it's also partnering with the fintechs, the agri-techs, the insurtechs, the climate techs. There's now tech in everything. But we need to partner with those strategic partners in order to reach the underserved communities now and in the future. So very critical for us. We're also seeing the big tech companies making a huge difference. You've got the likes of Apple, Google, Microsoft, Amazon. With these big tech companies, you're able to get a credit card. You're able to get a virtual card. Some of them have recently announced that they're going into digital currency. So in as much as we need to collaborate with them, in the future, banks need to be very wary that they also become a competitor. So there's a balance between collaboration and having a competitive edge. Women and the youth are very close to my heart. And I think as banks, as we focus on the underserved communities in the future, women and the youth will become very critical. They are very critical now. We do have Vanamayo Banking, which is the name that I've adopted for our Z Women's Banking proposition. So thank you very much for that, sir. And we'll continue to invest in women, to invest in the youth. So that's capacity building, that's financial literacy, and I think making a difference in that space is very critical. Finally, Joanne, the Zambia National Financial Inclusion Strategy is very clear that we need to get to 85% of financial inclusion by the year 2028. And I think banks will play a major role in achieving that goal, as long as we stick to our strategic priorities that focus on financial inclusion for the underserved in the future. Thank you.
Absolutely amazing. Thank you very much for that, Chanda. 2028 does not seem like it's very far away. And it means that we have a lot to do to jump from the 42 to 85%. Yeah. But Zanaco is ready, and this is the reason why we're even having our shareholder day and other engagements in the community as well. Thank you very much to our panelists today, and thank you for unpacking the future of banking with us. We can see as shareholders that the future of banking is exciting. We see banking being reinvented through our hybrid branches, which we will see evolve. We see us engaging in highly operational efficiencies, bringing in our AI and leveraging of technology, but also seeing the opportunities even amidst the risks and ensuring that we're carrying everyone along, collaborating but remaining competitive. Thank you so much. We look forward to walking into the future with you, our shareholders and stakeholders. Thank you.